Hey everyone, this is Jose. We are about to start. This is a sound check. Please go ahead and have a quick confirmation message on the chat box so I know that you hear me. And from there, we'll get started, okay? 5 seconds to go. Even less now. That's it. We just reached the top of the hour. So, sounds is good. Very good. Thank you so much, Bojan. I see your message there. I'm maximizing the introductions screen. So we can be all ready to begin. Here we go. Here we go. How are you, everyone? A pleasure to join you for today's session. Today is 12th of February 2020, isn't it? We're getting together for us to explore the market, looking for longer term opportunities. And longer term basically means swing trades. Okay, so we are not looking for long term investments. Let me take a look at your names here. How are you, everybody? Yes, everybody's okay. Everybody's okay. I see all your names. It's very nice to see you all, everybody. Very, very nice. Thank you for joining me in the Get Together session. It's always a pleasure. And as I was saying, today we're going to be exploring the markets from an angle of longer term. And therefore, we're going to be using options. We're going to be using options for both directional trading purposes and also non-directional trading purposes. So in this sense, we'll be looking at all those different types of opportunities, okay? Making money as the market moves either up or down, but also making money basically by selling options, collecting premium, and allow them to expire worthless. Okay, of course, assuming that price remains in some sort of a range, we're going to use UFOs and other pieces of technology to identify all of this. So that way we can do our trading in a way that is mechanical, so no human biases. We are going to be robots in our trading. Okay. So let's begin. Disclaimers first. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of factual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And this is the introduction, my friends. So now we got TradeStation and we are ready to begin. Okay. So first of all, let's begin looking a little bit about the markets. Okay, markets making all-time high, as probably you all know, 0.44% up in the pre-market session. Futures markets are up, so we're gonna see a small gap to the upside as the market opens. Beautiful uptrend. Remember some time ago when just a couple of weeks ago or so, right, when the market was falling hard here, and we were saying, hey, there are plenty of UFOs below. Could we have a change of climate? Of course, and we did. Okay, but what happens after that change of climate? Well, those UFOs kicked in, and not only they kicked in, new UFOs formed since then. So again, a pretty stable market condition, to be honest. Even though it could be classified as crazy, or with the coronavirus, or it could be classified as crazy as making all times high again. Well, evidence is evidence, okay? And this is the importance of not being biased when we trade. We need to trade what's happening instead of guessing what may happen or may not happen, okay? Because guessing is low probability, where using evidence is not a guarantee, but certainly will provide us with greater odds of success in our trades, okay? So the S&P doing all of this, and therefore when looking at the VIX, so looking at the volatility index, the S&P 500 volatility index. So we can see the VIX coming back down after a movement to the upside that we saw, reaching levels around 19, something like that. So now the VIX, it's moved down back to 14 something. And guess what? Because the market is about to open higher, guess what's going to happen to the VIX? Well, actually the VIX is it's already trading at this moment in time. So this is the current real time price. 1441 is already that price, okay? And we can see how the VIX is falling. So certainly that's not going to be good for our credit trades, okay? That will not be good for the credit trades, but still we may be able to find some opportunities, okay? When looking at the scanner, I came up with 7 symbols for non-directional trades, and we also have a few symbols for the neutral ones, okay? And then when it comes to directional trades, you can see here 12 symbols to be analyzed for trades betting on a movement to the upside, and also shorting opportunities, which is 5 more symbols. Okay, so we got some work to do here looking at all those different markets. Again, if you are new to the session, or you are watching this recorded later on, just know that as I begin the session, I'm going to be using the scanner. Okay, maybe it would be actually better if I zoom in the scanner. I think that would help a lot. Oh, okay, got it. I need to click somewhere else. Hey, why is it not allowing me to zoom in? Interesting one. Okay, I'm not sure why I cannot zoom in today. Okay. Just 1 second, guys. I'm just being a little stubborn here, but I would like to be able to zoom in. I'm not sure why I cannot. Okay, so maybe I'll do it like this. Okay, that was my alternative plan. So okay, let's do this. Here we go. Okay, so here's what we have. Here's I'm just being challenged by my own computer. Anyway, that's it. I got it. So what do we have here? Well, we have the scanners in TradeStation, where you can see in the middle part, which is the one with a gray highlight. Okay, it's ND for non-directional, and then below we got neutral trades, and then above we got directional trades. Okay, so basically I am focusing on those 5 rows, where the 2 above are purely directional, directional long, directional short, and the 2 below are neutral long, neutral short, and then the one in the middle is purely non-directional. Okay. Also notice that the ones that are in the top part, okay, those are debit trades. Okay, meaning that here you would be buying options. DBT stands for debit, so you would be buying options. Where the ones below are credit trades, meaning that we would be selling options, okay, and collecting a net credit. We buy and sell options at the same time, to be honest, but we end up with a net credit overall, and that's why we call these credit strategies. Okay, good. So let's begin. We're gonna start with non-directional trades, okay, and I'm just gonna sort these based on the price. We're gonna start with Alibaba. Also, as I am ready to double check if Alibaba is gonna be a valid trade or not, what the other thing I am doing as well, bringing it from my other computer screen, I am bringing in a trading view. So we can type the symbol Alibaba, which is Baba, and we get to get information related to earnings. Okay, so earnings took place on February 13, or are going to take place on February 13, which is obvious and no need to comment on that. Today is February 12, so that's tomorrow. It's the expected date for earnings for Alibaba, and obviously there's no way we can take a trade on Alibaba because our reference point is the Fridays. Okay, so Friday is our reference points because we're going to be selling options and waiting for those options to expire on Friday. Friday is 14, earnings are on the 13, so then we cannot do that. Okay, we cannot do that. So we will pass on Alibaba. We go for the next one, which is JP Morgan. And with JP Morgan, again, back to TradingView. So JP Morgan, this is looking much better because the earnings took place before, earlier on. That was on January 14, meaning that the next earnings are supposed to happen much later in time. So if I was to input JP Morgan on the Yahoo Finance website, which is the other website I'm using for this purpose, as you have seen before, you can see that the expected date for earnings would be April 14. So in a theory world, I could use options that go as far as April 13. But the problem here is, take a look at JP Morgan. That stock is making all-time high. Okay, that stock is about to make all-time high, currently trading at 138. All-time high is around 141. So in other words, if I drop to the 55-minute time frame, I'm not sure I'm going to be able to find the 2 UFOs I need. Okay, here we go 1. Okay, that's fine, and we got 50% probability. That's good enough. Okay, from that one. What about pre and post market? If we do pre and post market, okay, then we get none. Okay, and what's the problem? Well, none plus 1 equals 1, and that doesn't work because one of the rules that we use when we do non-directional trades, okay, pure non-directional trades, is that we need to have at least a couple of red UFOs above price and also a couple of green UFOs below price. But we don't have that as of yet. Okay, so what do? We move to Expedia. And while we are moving to Expedia, I'm just gonna go ahead and check Expedia and check when is the earning expected to be, which is on the 14th. Again, same story as Alibaba, we cannot do it. What about W, which is the next symbol on the list? Okay, so W, it's pointing at earnings on February 28th. Okay, well, February 28th, now we can work with this, with Wayfair, which is the name of this particular stock. Okay, so let's load W here, Wayfair. Okay, let's see what's going to happen from a probability standpoint. Remember, we need at least 48% for the non-directional trades. The setup here is actually looking nice with multiple UFOs above and below. So we are still waiting for that PD to go away because PD stands for pending data. And we are waiting for this to go away so we can confirm if this trade will provide the probability we need. Okay, so we're just gonna wait. It should not take long, and we should have the data on the screen and therefore the probability calculation. Okay, so just waiting for that. Looking at the chat box, you guys have been silent since the beginning of the session. It's good. I'm guessing that you guys are focused on the session and looking at it. Hopefully as well, working with me in parallel. Maybe you have a couple of computer screens, and one screen you have me, and the other screen you are kind of replicating what I'm doing. That would be the perfect way to do it. Okay, so 46% is not good. Okay, no good. Let's switch to pre and post market to see if there is more institutional interest. Okay, and there is less. Okay, so that one is a shame because we do have almost a perfect setup based on the UFOs on the screen. But thank God that we got the probability measurements here, because this is kind of revealing what's really happening behind the scenes. And what's happening behind the scenes is that there is not enough institutional interest. Okay, so we're gonna move to Gilead Sciences, so GILD. Looking at earning dates. Okay, earning dates have been before, isn't it? February 4, so it already happened. Next one here is gonna happen on April 30. So certainly earning dates are indeed allowing us for a proper opportunity to pick expiration days that we want. We are not making all times high either here. So we do have UFOs above and below, I would say pretty likely. So the question is, coming back to the 51-minute time frame, the question is, as the chart loads, will we have the probability values that we need, which is that 48%. Okay, and we do. You can see that probabilities suggest 54%. That's nice. Okay, we have one red UFO right there. Okay, certainly I need more UFOs above. Okay, so what about if I check pre and post market? So 54 becomes what? 54 becomes 1, 2, and 3. Not yet. Almost. Okay, just waiting. And not sure why it's taking so long. Okay, now I got it. So pre and post market, it's also providing us with 50 something plus. Okay, so certainly, we're good with probabilities. Okay, so what we need to find is UFOs. We have one here located at 69 something. Okay, but again, if I go back to let's say the monthly time frame, notice that a higher price action would be located somewhere around, let's say, July 18. Okay, so I'm going to go back to the 55-minute time frame, but now I want to double click on the candles to make sure I'm going to be loading data all the way starting from July 18. Okay, this hopefully will uncover some UFOs above, and they are above. Okay, unfortunately, they are very, very far, really, really far on the pre and post market session. So let's see if we got something below 74 with a regular session, and basically a regular session or pre and post market are providing us with the same UFOs. Okay, nearest one is there. Okay, nearest one is there, and again, that would imply selling options so far out, okay, which again, it's very unlikely the trade will work well. So in order to save time for other trades, I'm just gonna pass. Okay, I would love if I had, let's say another UFO right here. Okay, that would be very nice because you can define a range from here to here or something like that, and prices in the middle. So now you can allow for these to do something like that and sell options and profit from them. But with those UFOs so far out, that's a problem. Okay, it's a problem because the further away the UFO is, the less you get paid for the option. Okay, so CNC would be the next stock for us to check. So I want to check earnings, okay, for CNC, and that would be that just happened, isn't it? On February 4. So the next one are gonna be April 28. Okay, so that's nice. For now, it's looking good with multiple UFOs above and below. So we may have an opportunity with CNC is looking pretty good with a powerful probability number. 54% for stocks is huge. Remember, stocks are fragile. Okay, so there is a lot of institutional interest on that stock, and therefore we're gonna see. Okay, so let's begin a little bit of drawing here. Okay, so my second UFO here is here. Okay, my first UFO is there. Okay, what else? I'm just gonna draw lines where the UFOs are, because in a minute I'm gonna switch to pre and post market, and again I want to look at where those pre and post market UFOs are located at as well, so I can have a well balanced opportunity. Okay, so yeah, so I'm gonna draw lines all the way to here and here and here, because it's looking like with so many UFOs, I may have more than one setup that may work. Okay, so we'll be looking at all of those. Okay, but again, pre and post market, I want to check that. So 55 becomes 41. Well, actually 41 does not meet our rules. Okay, so the institutional interest clearly on that stock is found in the regular session. Okay, not the pre and the post market. Okay, so that's what we have, and this is again to be well respected. Okay, so now let's go ahead and turn on where is it, Option Station Pro. Here we go. So we're gonna turn on Option Station Pro because now notice that we got multiple possibilities with UFOs above and below, and we certainly have more than two, isn't it? And we can set up trading scenarios and therefore non-directional trades. Yeah, I'm reading you there. And we can set up different scenarios. And the key question here will be like, okay, so out of all those UFOs, there are so many, which one should we use? Okay, that's the real question. Okay, and this will depend on a collection of factors. Okay, and I draw so many lines because one thing I know is that CNC is not going to be the most liquid stock in the world. And because of that, I may not be able to use weekly expiration dates where I have enough liquidity. I may be forced to use monthly expiration dates where normally I would have more liquidity there, unless there is huge amount of institutional interest and I was not aware of. And surprise, surprise, we just get a very liquid option chain. But again, I'm getting ready myself for all those different scenarios because I may need to do a little bit of playing around to get a trade that actually is valid. Okay, so I'm going to start with February 21st. Okay, by the way, notice that we don't have the word weekly, which means it's a monthly expiration. So I would expect way more liquidity on the 21 and the 28. So, I would certainly prefer to use the 21. Let's take a look. So 64 got 110 to 120. So it's 10 cent spread. If you look at the next expiration, 28, we look at the same 64, we got 140 to 180, 40 cents of spread instead of 10. So that's what I meant. Okay, that's what I meant when I was pointing out the fact that the monthly is going to be more liquid. Okay, so let's start with February 21st. This is where we should start anyway. But again, ideally, we would not only start there, but also end there. So I just right-clicked and inserted an iron condor. I selected my upper statistical range to be one standard deviation above and one negative one, meaning one standard deviation below as well. I am not comfortable about this figure that just showed up here, and even less about that figure that just showed up there, given the price of that stock. Okay, and this may be a matter of lack of liquidity. Okay, lack of liquidity. So what I'm gonna do is I'm just gonna look for strikes which are round numbers instead of zero point 0.5. Okay, so I'm gonna make this to be 65, and still those values are are absolutely unreasonable. And this is really really strange. Okay, really strange. Okay, so let me do this. I'm gonna disable the iron condor. Let me get rid of the iron condor. Yeah, so there is a very weird calculation here when it comes to what is one standard deviation above or below. Okay, so why is that? Has that stock been crazy recently? No, it hasn't. So if I go back to the daily time frame and I was to insert a study, which is um, yeah, numbers don't make sense at all. Yeah, you're right there. Yeah, I thought you were commenting on Mark question. Sorry for that. So I'm looking at volatility standard deviation. Okay, that's the study I'm going to insert. This basically is going to tell us more about the volatility of that stock. And, I'm just trying to understand why is it that Trust Station would understand that such a crazy move is going to happen. Well, that stock got a great volatility, 33%, but certainly it's not like something crazy happened recently. Actually, it was much higher before, 50%. Yeah, so even with a 50% move in 1 year, 50% is half of the price, then it would be like $30. So I don't get where it's getting that 14. Okay, I don't get it. So let me close this and reopen it. I think it's gonna be the same story. I don't think that closing and reopening is going to fix this problem. But again, we did have a trace station update recently, and I'm just facing this problem for the first time. So just in case, I'm just going to close and reopen. But we may need to do some manual calculation if we want to do that. Okay, so now I got 0, 0. Okay, so what happens if I right click insert? Okay, what if I right click insert an iron condor? Okay, so yeah, I know what's happening. The market is about to open 8 minutes from now, and therefore there is no data for volatility, I guess, in the backend, and it's not giving me the opportunity to do the calculation. Okay, so guys, let's do this. Little bit of a slowing down experience here that is slowing us down. That is certainly not appreciated before the market opens, but that's what we got. So when looking at CNC, it does look like a setup. It's possible in the sense of having so many UFOs above and below. Where I got stuck though is that when I did my statistical calculation to see how far one standard deviation is above and below, I got this crazy number. Okay, now I closed and reopened, and now I get basically 0 for everything. We've seen that 10 minutes prior to the market open, some options that are resets. The option chain used to be fully zeroed out. They are not any longer, but it seems that in the backend, TradeStation still have some values that are fully zeroed, and therefore we cannot do the calculation now. We need to wait 7 minutes, which is going to be 9:30 a.m. in New York, and then everything will start calculating. So we'll come back to CNC, and also we need to check DAL. We haven't checked that one, so we leave those two for when the market opens. In the meantime, what we're going to do is just begin looking at the directional trades, because for directional trades, you see as I click on symbols such as Netflix, this is going to load a new chart, and the first thing I'm going to do is to look at what are my climate situations. Because the climate will either allow me to trade or not. It's kind of like a permission system, isn't it? So we'll be looking at that to see if out of this list any of those stocks qualify or they don't. And then when the market opens, we'll start planning the trades. Okay, so we can certainly use 7 minutes to do that together and conclude which stocks to trade and which stocks to not to. So Netflix is pretty clear. Stats suggest that this climate should last for 6 candles, and it's been running and moving in that direction for 13 candles. So this is an overstretched market, and therefore we are late to the market if we get long. So based on the method that we use, we're just gonna pass. Okay, so the next one is going to be now. Okay, and is not going to be now actually, because again, same story. We got stats for up climates that are confirmed. Stats are 6 candles. And the current climate has already been running for 10 candles, so it almost double what statistics suggest. So then not a good idea. Okay, so we're gonna check Twilio, and in this case, it is looking much better. Okay, why? Because we have climates here, which are 7 candles. Remember, we round up, so it's 7. And guess what? We got candle number 1. And remember, when the market opens, it's going to be candle 2, because the U.S. market is not a 24-hour market, and therefore it's closed. So the moment the U.S. market starts trading, we're going to have a second candle, so that number 1 will become number 2. But certainly, candle number 2 out of 7-day climates makes plenty of sense, and therefore it would certainly make sense to plan on those trades. Okay, so we're gonna keep this one in mind to begin the planning of a trade. We still need to wait for the PD to go away, so we got the full chart loaded, because right now, as we speak right now, with 46%, that would not be acceptable. Okay, with the purely directional trades, okay, we are very demanding, and we need those stats to be at least of 50%. If not, we don't bother. Okay, so we need to keep that in mind as well. Okay. Yeah, yeah, Lisa, I hear you. Yeah, Edward, I hear you as well. Good to see you, Edward, by the way. So yeah, it's probably something's going on. Maybe they're just doing some maintenance with the TradeStation servers. Not the right time though, but I'm not sure. Okay, but anyway, we'll come back in just a second. Okay, so let me see. It's taking a long time here for this to be loaded. Okay, just did. So look, what do we have? We got 48%. That is not acceptable for a directional trade. So we're gonna check pre-post market. Many times we've seen it actually many times, that the institutional interest is actually not during market hours. It is during pre and post market. So the way to know if we do have an opportunity or not, another way to say that is the way to know if there is enough institutional interest or not, is to switch to pre and post market like I just did. And we are just waiting for the data to be downloaded. Not sure why it's really downloading very slow today. Let me check download schedule. Oh, okay. I have so many downloads. Oh no, this is the message center. Sorry for that. I clicked on the wrong one. Message center download scheduler. Here we go. Oh, okay, so it's still downloading, and it's the only download that is happening. I'm not sure why it's taking so long. So I'm just gonna force a cancellation here. Okay, move to the daily time frame, move back to the 51, 55, and this is a little trick to speed it up. And notice what we just found out. The institutional interest in that stock is actually during the pre and the post market, not during the market hours. Okay, so it's a very relevant piece of information for us to know. And this together with the fact that the average is 124.27, and the fact that this market is going to open up by 0.53%, which is 26, that's going to bring the average a little higher. Let's call it around 125. And guess what? We have around 125. We have a UFO right there waiting for us. Okay, so my friends, it does look like we have an entry, which is 125.06. Okay, so therefore we're going to be loading the daily time frame with the AutoUFOs, looking for a target. Okay, so now we are looking for a target, and the target in this case for TWLO. Okay, so TWLO, the target is going to be the red UFO, where, as you can see, that would be 128.60. Okay, so 128.60, that would be the target for that particular trade. Remember, just in case, I'm getting the target from the daily time frame using AutoUFOs on the daily time frame. where we also got the climate from the daily time frame. But for the entry, we don't use the common time frame, isn't it? We use the edge time frame for the entry, and that was found on the 55-minute time frame, as you can see here on the watermark. 55-minute time frame where we had that setup meeting our rules. Okay, so well, you know what? We are gonna have to pass on this one. Okay, interesting. We were up by 0.5% in the pre-market, and basically those institutions released their buy orders and price went down. So the average is actually 124.49, which is it's below that UFO. Okay, it's below that UFO, and yeah, so we are not going to enter this trade. Okay, but again, this could be a stock, a valid stock. If in the end this picks up some momentum, it will create new UFOs, and the average will go up in the following days, and you still got 5 more days to go after candle 2 from 2 to 7. You still got 5 more days, so hopefully you can plan on the trade yourself. Okay, anyway, I need to continue with this list. Okay, so we stop here at TWLO, but I would like to go back to non-directional trades, back to CNC, and check if now that the market has opened, we do get some calculation that returns anything that makes sense. Because as we speak, this makes no sense. Okay, so let me reload. Okay, stock moving up 3% today. Okay, that will not help the options premium. Probably is gonna make the options premiums to drop very, very much. So loading option station. Almost there. Here we go. Good. So okay. So yeah, something crazy is happening on that company, guys. Okay. Again, when things happen, when you see crazy data on the screen, could be a technical glitch, but sometimes it's just crazy. Okay. So notice the spread available at that moment in time with a 64 strike. Earlier, it was $1, $1.10 or something like that, 110, 120. What's going on here? We don't know. But the fact is that the stock is gapping up like 3%, 3.5%, and there is a massive amount of greed and fear built in those options. Implied volatility is to the roof. And what I'm guessing is happening is that TradeStation servers were picking up on that, and that's why the statistical calculation implied a very high value earlier here and a very low value here earlier. So I am thinking, after what I just saw on the chart, that probably it was not a bug. Okay, probably was not an error. It's just TradeStation was passing on into that information into the statistical analysis, because notice what just happened here. Okay, it's certainly not a normal case, but in the other hand, I will say it's very nice that it's happening with all of us here together, because certainly when these things happen, if you are new to trading and these things happen to you and you never seen it before, but you happen to be alone at home by yourself, then maybe you would be, so what do I do now? Okay, so anyway, so good that this happened while we were planning on the trade together. Okay, but yeah, and Mark, for the non-directional trades, the climate does not matter. Okay, so we are looking at other indicators built in the scanner, isn't it, that are looking for this passive type of market condition that should lead to a market going sideways. Okay, so we are not looking at the climate in that particular case. Okay, so no need to add that analysis, because the climate is not designed for non-directional trading. So just ignore it. Okay, don't try to add climate analysis to your non-directional trades, because this is a tool that is not designed for that purpose. The climate is designed to catch move and ride moves, not to do non-directional trading. Okay, so just keep that in mind, Mark. Okay, so with Delta Airlines, okay, as we speak, we have pending data still, so we are waiting for it. It's going to be in a minute. For now, it's showing us 47%. That will not be acceptable. That's pre and post market. Let's see what happened with regular session. With regular session, it is nice because we do have 51.36%, and that is more than 48, so that's good. And also we got UFOs above and below. What I didn't check though, is earnings. Okay, so let's check what earnings are on Delta Airlines. We have the prior earnings was on January 14. The next earnings will be on April 9. Well, that's nice because it gives us a great amount of flexibility for those particular trades. Okay, so well, that UFO is gone. That UFO, let's call it gone because price is in the middle. So we are talking about this price point, 61.21. And notice that you will see that rarely, but sometimes you will. You will see the inner circle of the UFO is outside the UFO band. Okay, you see that? That is not an anomaly. Okay, this is when the app detects a little bit of contradictory information. So the app basically will point at what the app would consider the worst case, and notice how in this particular case the inner circle is being stretched up. Okay, so we gotta respect that top part as the extreme, and therefore it will be the end of my second UFO. Then that would be number three, and then if I was to look at below. Below is actually quite easy because I got one, two, three. So the closest I should go is this one. So let's use that as a reference, okay? And let's measure from current price to that UFO. How far is that? Okay, how far is that? And now I'm gonna just move that vertical line higher, and notice that this basically tells me that for me to accept this trade, I should be relying on the upper UFO, okay, not number three, but actually number four. Okay, so if I was to use the upper purple line and the bottom purple and the bottom purple line, so now I have created a nice range for Delta Airline to do whatever it does, and have UFOs to defend myself. Now, this is a very wide range. Okay, this is a very wide range. Good news is that we can do an Iron Condor all the way to April 9. So it may work because of the dates, but really my concern here is Delta Airlines is not a very expensive stock, and selling 63 options on Delta Airline, I'm not sure we're gonna get paid enough even if we go far in time. Okay, so that's the first thing I'm gonna do. Instead of looking at the statistical range, I'm just gonna go out all the way to March 20 and look at the 65s, and you know what, I get paid 66, 26. It's not ideal, but we may make it work. Okay, so let me right click and analyze and sell an Iron Condor to see if this trade will be valid or not. And I got minus one standard deviation, plus one standard deviation. Okay, so we got a little problem there. The one standard deviation above suggests that the UFO to be used needs to end at least at 64.06. And our UFO, if I'm not mistaken, is 63.14. Okay, so that's not high enough. And if we were to do this trade, the only way to accept it would be to use a shorter expiration date, such as March 13. Okay, let me change this very quickly. Okay, let me kill it and start again using March 13. March 13 got a bit more volatility, 23. Okay, even the prior one got a little more, 27. So we may get lucky and get premium enough. Of course, we got one week less. Okay, so we're gonna get less premium for the 63, 64. But yeah, actually we got more premium. Okay, we also got more slippage. Okay, so we're gonna have to be careful with that. But 50 or 33 is more than 26. So you can see here how this why this volatility value is greater than this one. Okay. Also on the March, we were actually shooting for the 65. Okay, because there was no 64. Okay, so let's check if we use March 13. And let's see if that is going to provide us with a range, which is okay. Okay, and stats here are also still pointing at 64, as the location for the range. Okay, so this will not be valid for us. Yeah, this will not be valid for us. And I guess if I look at March 6, then probably I'm going to get a no. Yeah, 64, and that would be 20 cents. So yeah, so it's not gonna work. Okay, and this is the problem with stocks that are of a lowest price point. That's why I sorted the list with the most expensive stocks on the top and the cheapest stocks in the bottom. Normally, I would even kind of tend to ignore those and rerun the scan and see if there is an opportunity, or maybe do it tomorrow instead of today. But since we are doing the session together, I always like to squeeze as much as I can to have opportunities for you guys, and also if I end up with no opportunities, at least you saw the process, and then you know how to do it yourself when you do it yourself. Okay. Anyway, so back to directional trades. Okay, so we are back to directional mode. Directional mode works very well. Actually, if you do it right, directional trades pay you more than non-directional, isn't it? Even though an ideal portfolio got both types of trades to be well balanced. But again, if you look at the trades that I got here, we got some profits kicking in, and this Pepsi trade, that was a long call. Okay, so long Pepsi, okay, and if you're in this trade with me, you're making money. Okay, so directional trades are certainly good, even though in the world of trading options, for whatever reason, I believe that there are many more proponents of selling options than buying options. Okay, and I love it too, but what I really love is to do both. Okay, so anyway, so TWLO is where we stopped. EFA, I'm gonna skip that one. Is an ETF. Okay, so I'm gonna move into Bristol Myers. That would be the next one. And of course, I need to check my climate first. Okay, so climate, we're dealing with climates of up to 8 candles, and this is candle number 5. So certainly we are on time. So I need to see those stats. Okay, I need to see those stats. I'm just going to anticipate a little bit everything to save time. The next one is XLB. That is an ETF, so I'll skip it. The next one is Mendelez, which for whatever reason, even though that stock meets liquidity criteria that are part of the scanner, I never, ever in my whole trading career had an opportunity to click on the option chain and find a good liquid option. So I'm just going to skip it out of saving time. Okay. So iRobot. Okay. So this is another stock that we will check in a minute. Okay. We'll check that in a minute as well. Climate is good. So 1 candle out of 6. So, we're going to be looking at Bristol Myers and iRobot for now, and then we'll continue the list moving down. Okay. Question here from Bojan. For some of the newcomers, something that Jose always says, and it's very true, as traders, we need to be very picky, saying no more often than yes, because we trade per plan. Yep. Very good. Yeah. And Lisa, earnings for Pepsi are tomorrow. And this means what? If Pepsi earnings are tomorrow, what does that mean? Would you guys be able to answer that question? So what is Lisa suggesting to all of us to do if earnings for Pepsi are tomorrow? Okay. So Bristol Myers, 54%, that is valid. And the average is 66 point something, which falls right in the middle of that UFO. So certainly we do have an entry with Bristol Myers. I just want to check pre and post market too. We also got 55. Okay, that's good. We don't have the UFO there, but it's okay. We can certainly execute out of the regular session UFO, which meets our probability rules as well as the location, because that UFO is enveloping that EMA, isn't it? So the EMA is in the middle. In other words, we do have a valid entry. Okay, so time to look for a stock. Let me say that again. Time to look for a target. That's what I meant to say. Okay, so looking for the target. So turning on AutoUFOs. It doesn't show any red UFO as of now. Looking at the monthly time frame, there is a UFO higher than current price. Okay, but really, the highest it went was March 16. Okay, so I would want to load data starting from March 16 to see if there is any UFO at that moment in time. So let me disable auto climate. Okay, so that way I save a little bit of computer power. So March 2016. Okay, And guess what? We do have a UFO there, and that one is located at around 75. Okay, so we are shooting for like a $7-8 move on Bristol Myers. This is actually looking like a great trade. We still need to look at the options, but for now, it's looking good to me. So 74.25. Okay, so Bristol Myers 74.25. That would be the location for the target. Okay, you guys got this right. I got my target thanks to loading more data. Okay, and now I'm just gonna go back to my normal amount of candles. Okay, so I save computer power when running my trading apps. In this case, Auto Climate here in the bottom left of my screen. Okay. Yes, very good, Lisa. Get out. And by the way, I'm surprised that only Lisa answered the question. That's an important one. Okay, so maybe I didn't do a very good job here explaining the importance. Okay, so I'll complete planning the trade on Bristol Myers, and then we'll talk about Pepsi for a second, guys, because certainly this is what's going to happen with Pepsi. Is a source of risk, and I need to show you how to take care of that. Okay, I thought it was clear, so again, probably I should have done a little bit of a better job explaining that. Okay, so what do we have? Okay, so look, just to be a little visual, I'm just gonna bring this down. Okay, why? Because this is gonna be our entry. Okay, that UFO here is gonna be our entry, but remember our target. Okay, our target is located at 74.25 based on what we said before. Okay, so 725 is all the way there. So what does that mean? Well, it means that being 74.25, what we need to do is that we need to be selling options. Okay, sell options beyond target, beyond target. Okay. So if the target is 74.25, so the options needs to be a bit higher. Okay, we'll see how much higher as we adjust the trade. Okay. For now, out of simplicity, I'm just gonna say we're gonna sell the 75 call. Okay, but again, I need to confirm that. Okay, I'm not sure yet. Sell 75 call. Okay, and then what we need to do, knowing that our entry, okay, entry will be located at what's the top part of this green box? It's 66.67. Okay, so 66.67. So what we're gonna do is that we're gonna be buying a call. We don't know which one yet. Okay, we're gonna be buying a call, and the call that we buy, okay, is gonna be so buy call or buy options, I should say, just to keep it the same, between entry and target. Okay, so we need to buy the options between entry and target. So this is how we're going to structure the trade. Also, we need to talk about the time to target. Okay, so to calculate the time to target, I'm going to use a calculator because the time to target will basically define the expiration date for us to use. So I'm looking at the daily time from here on the bottom left again. I'm going to be looking at the average true range, which is 1.40. And now I'm back to my calculator. And what is it that I know? I know my target is this price. I know my entry is that price. And I know the average true range is that value, 1.40. So what am I going to do? I'm going to calculate the difference between entry and target, which is 74 25 minus 66.67. This is $7.58, and I'm going to divide this times the ATR 1.4093, and that will tell me 5 ATR is what I need to wait. And we're going to make each daily ATR to give us 7 days of time. So times 7, basically we are expecting this trade to be at least 37, 38 days to get to the target. Okay, that's what we're expecting. 37 days, that's the expectation. So knowing that, I'm going to load the auction chain for Bristol Myers so I can check on the different expiration dates available. Probably I got March 20 with 37 days. I do. So that is the one I would initially plan to use. But also, that's not enough. When we do these trades, remember, we need to check what the earnings are. So we pick dates that are lining up as much as we can with earnings. And earnings for Bristol Myers is April 23. So when looking at the option chain, I do have April 17, and it's also a monthly expression that it gives me 65 days, which is more, but at the same time, that option will benefit from a time passing. Not now. Right now, we will certainly suffer time decay. But what I mean by benefiting from time passing, I don't mean it in the form of theta. That would be incorrect. But I mean it from the point of view of as time passes, we get closer to earnings. People will get eager to buy the option, and we'll have an increase in implied volatility, which will fight a little bit the theta decay effect of time passing. So I rather use April 17, even though it's going to be a bit more expensive, but it's a much higher quality trade. Okay, so I'm going to right click on April 17 to analyze and buy a vertical spread. We're going to do a bull call spread. So that is a vertical spread, debit vertical spread, or vertical debit spread, however you want to call it. So I'm going to click on it, okay? So I can go ahead and input all my parameters. 74.25 is the target, 66.67 is the entry, and the bottom slice, I'm going to get rid of it. I don't need it. So again, this is the entry below, this is the target above, okay? And here I'm going to be able to see the Greeks, okay? But before I look at the Greeks, I also need to adjust the trade the way I said on the chart, which I said I'm going to sell the 75 call. So let's pick 75. That's the one I sell. And then I'm going to sell an option between entry and target. So my target, my entry is 66 something. So certainly 67.5 is above that. So that would be in between. Okay. So I could have a starting point just like that. Okay, which is not going to be the end of the story. As you will see, we're going to do some adjustments, but that could be a valid starting point where you go for 75 beyond the target, 67.5 between entry and target. Okay. So now, when doing that, what else do? We go check the delta where the entry is. And we need that value to be 30. And in this case, unfortunately, it's not 30, it's more than 30. In other words, I got too much delta. So one way to fix that, would be to move the 75 further away. But again, when I look at the option chain, the 75 only pays me 20 something cents. I'm going to load everything. Actually, I loaded everything and there is nothing above 75. Okay, so really I cannot sell anything above 75 because there is nothing. So what am I going to do then? Well, then I'm not going to touch the 75 because there is nothing above. Okay, I'm going to leave it like that. And to reduce my delta and make my delta to be closer to 30, I'm going to rise my call from 67.5 to 70. If I do that, unfortunately, my delta dropped all the way to 21. And why is that? Well, because this option chain for that expiration date has strike price increments of $2.50 at a time, and that is not allowing me to be precise enough when it comes to my Greeks. Okay, and when this happens, what can you do? Nothing. So what is the right approach? Well, you got two choices. Choice number one is to go back to where we were, okay, which I would certainly want to avoid that, and I will explain in a minute why. And the second approach is, instead of doing a vertical spread, just go ahead and buy a call. Because if I buy the 70 call, notice that this option got a delta of 30 or 33. So if the price goes down by a little bit, it's going to be around 30. So if I buy the 70 call by itself, so analyze by a single call, okay, and of course you need to be careful with the check marks, okay, because right now I got both checked. So notice my delta is 68 because the computer understands I'm buying both. So I'm going to uncheck the vertical spread. Okay, so now I'm left only with a single, and notice how the single now is giving me the 30 delta I need. Okay, so that's what I was expecting. That's why I said I don't think I'm going to do the vertical. Okay, but I want to go back to the vertical for a second because there is another thing I want to point out. Okay, since we don't have that much time, but we do have time for me to say. So when you do this by yourself, you know how to do it. So if I go back to checking the vertical and notice I unchecked the single, okay? So now it's just like before when we only had the vertical. So I got my delta of 38, okay? And some of you may say, you know what, I'm okay with that, I'll do this. Well, here's the problem I see. Problem number one The cost of the trade would be $171. Okay, $171. Where if I, instead of doing the vertical, I was to do the single, okay, the cost would be 97. Okay, sure, you get more delta on the other one, and that's why it's more expensive. But you also got more theta on the other one, um, and because of you got more money to lose. You don't have more theta. Let me rephrase that. So the single got 1.51 theta, the vertical got 1.16. So you don't have more theta. But if that market was to move against you and keep moving against you all the way, you have more money to lose, right? So if you think about it from that point of view, the other trade may be more efficient, okay? And the real reason why I don't want to do the vertical in that scenario is because in a perfect world, we want positive gamma at the entry. That's a given. If you set up the trade the way I said, selling options beyond the target and buying an option between entry and target, you will have positive gamma all the time at entry. But what about when you get to the target? Well, notice here how the gamma becomes negative. In other words, there is a slowing down effect when it comes to the speed of profitability as you approach your target. And on top of that, it costs you more. And on top of that, I don't get the delta I want. So when I saw all of these very quickly earlier, I'm like, that's it. I'm just buying a call. Why? Again, I unchecked the vertical. Now I am checking. I'm going to check the single. Okay. So I check the single. And what's going to happen now? Well, notice how I got my gamma is positive at entry, but also positive at target. So I got a consistent improvement. My delta at the beginning is 29, but it will become 79. So I have a consistent improvement all the way. And yes, for sure, I am paying more on theta for that, but certainly it's worth it because, if you're wrong, you're wrong. But if you're right, it's going to pay you more. So this trade is likely going to work much better for you. Okay, so we're gonna place an order here, guys. And again, every time we place orders, I need to remind you that keep in mind this trade will have a risk of around $100 per call. So if that's too much risk, don't take the trade. If it's too little risk, you can take 2 calls, 3 calls, 5 calls. You decide how many, and also you decide if you want to use real capital or paper money. Okay, I'm gonna do it on my end. I'm just gonna do it with one. So I'm gonna click on the 3-dot button, select trade. And before I go too quick, I'm going to change duration to day. Make this to be a market order. And very important, I don't want to buy it now. I want an activation rule that will buy me this call only if Bristol-Myers goes below or equal than 66, 67, which is not far from the current price, and we may get filled in less than an hour. Okay, it could be, or maybe not. We'll see, because we have no control over the market. But the vertical distance to the entries is really not that great, meaning that we are quite likely to get a fill soon. Okay, so I'm just gonna click OK, place order as well. The moment I click place order, I got this confirmation window. So we are buying the 17 April 2020 expiration 70 call on Bristol-Myers, but we are only buying it if Bristol-Myers drops to 66, 67, equal or below than that value. The option order will be activated and we will get a fill. So click yes. So the order is in the system. If I move into my manage tab, you can see I got a received order on the top with Bristol-Myers waiting to get filled. Okay. I'm done with the Bristol-Myers trade, and we got 2 minutes to go. So I'm going to use those 2 minutes to talk about Pepsi. Okay, I want to talk about Pepsi and what to do if you are in this trade. So Pepsi, okay, so earnings are happening on 13th of February, okay? 13th of February, and therefore that's tomorrow, meaning that the moment the market closes today, when tomorrow it reopens, we may have a major gap against us. Okay, so this is the current price of Pepsi. It's moving higher. So that's why we have a profit on the account. But now what if we got a gap down all the way? Okay, so that would be certainly a problem. Okay, so which option did we buy? We buy the 145. The current value of Pepsi is 145.91. So we are above 145, which is the strike of the option. Okay, so the question is, what can I do? What should I do? Okay, Well, I'm going to give you a couple of options here. So when looking at Pepsi, okay, and looking at the options, of course, we are using March 20 for Pepsi. Okay, we're using March 20. Okay, so you will want to use the same expiration date and to do what I'm about to show you. Okay, so what you could do if you want to, it's to go ahead. You will see how the second choice is probably better, but I want to explain the first choice anyway because it could be useful to you. Okay, so what you could do is you could go ahead, okay, and sell the 140 calls. So if I sell the 140 call, okay, if I sell the 140 call, I will get paid $6.75. And if I have to deliver the stock at 140, and the current stock is trading at 145.76, so basically what I'm trying to say, let me go ahead and insert the extrinsic value of the options. Okay, so what I'm saying is that the 140 got $1.07 built in of premium. Okay, so in other words, we are making some money on this trade. Okay, we purchased that call when we did. Okay, we purchased that call. It doesn't show here. I need to customize it. Customize columns. Where is it? Trade price. So, well, actually, I do have the trade cost. Okay, yeah, trade price was 208. So I purchased it on 208. Okay, and now if I go ahead, okay, if I go ahead and I sell the next one for 6.70, okay, so let's see if we're gonna have a profit on that or what. Okay, so you would have $1.11. $1.11. You would have it collected as intrinsic value. So no matter what, you make that money. Okay, but then you will be exercised at 45 and assigned at 40. So then you would lose $5 on that. Okay, so as you can see, in that particular case, it's putting us at a disadvantage. Okay, unless the stock was to remain where it is or go higher. But if the stock was to go lower, there is not enough premium. And again, this little thing about selling calls below price is something that you could do if you got strike price increments, which are $1 at a time or things like that. Sometimes you can look at this particular calculation and you get extrinsic value enough to justify this action. But in this case, it's not looking good. So, so what's the only action that we can take to avoid the gap risk tomorrow when earnings are reported? Well, very simple. Close this position. So we want to come to the Manage tab and right-click or click on the three-dot button here and close this position. And naturally it's 315, mid is 320. You may want to try to shave it to see if you get it. I'm going to do market just so I do it now, but you can certainly try to shave price a little bit. And then you will place order to get out of this trade. And the moment you get filled, that's it. You are out of the trade. And now you have got filled there on this particular trade at 320. And you are out of the trade. Okay. So this would be the action to be taken. Close the trade. As Lisa suggested, I was just trying a little trick with selling an option against it, but unfortunately, that expiration date was too far out, and the stock didn't make the 145 call deep in the money enough as well to have enough intrinsic value and enough extrinsic value from the other call that would justify this action. Okay, but anyway. We are done for today, everybody. I'm just looking at your messages. It seems that all of you are clear. How is it going so far? How was the session, guys? Any feedback from me? If it's good feedback, I'll take it. If it's some positive critique, I will take it as well. And certainly, I am actually asking for it. If you guys have anything to share with me when it comes to the way the sessions are being conducted, if there is anything that I could do to adapt better to what your needs are, please let me know. You can do it now in a quick message on the box. I'm certainly welcoming you as well to shoot an email to reach@tradewithufos.com, and would certainly be very, very happy to to collect your suggestions this way. Okay. But anyway, a pleasure to have you here. Very nice to see you all. Very nice for your interaction and your contributions to the group. My friends, I will see you the next week. So see you then. Bye bye, everybody. Take care, everyone.